According to the International Energy Agency, the investments in clean energy needs to be ramped up to roughly 4.5 trillion US dollars per year by 2030. And that is about 3 times the level that it is at now. And that might sound like a lot of money, but when you consider that we invest roughly 7 trillion US dollars per year in fossil subsidies, we do have money to spend in another direction, right? And much of that money, the 7 trillion US dollars, are coming from pension funds and other institutional investments. So the question is, how do we redirect those investments to be a force of good, to support the climate transition instead of opposing the climate transition? And what we're going to talk about in this session is, can banks rid themselves of funding gas, oil, and coal? Truly, can they do that? And what say, if any, do regular, normal, standard people in general have in this transition? Earlier this year, we don't have time, together with our partners, we launched the campaign Move the Money, which was shedding light on specifically this. How can people look at where their money goes, their pension funds and other investments, so they do not inadvertently support climate, the slowing down of climate transition, and support fossil fuels. So here to talk about this link between banking and finance, we have some prominent guests. And with me here in the studio, I have Ariel Deranger, sorry, a French name originally. You're here, and you're Executive Director, Indigenous Climate Action. Great to have you with us.
Thank you for having me.
Thank you. And with us on Zoom, I have 3 guests. I have Ivan Frischberg, Chief Sustainability Officer of Amalgamated Bank. Great to have you with us. And also on Zoom, Jaco Minar, you are Chief Commercial Officer at Triodos Bank. Most welcome to join us also, of course. And last but not least, we have Anderson Lee, your Research Associate at World Resource Institute. So, we're ready to go. I'd like to start with you, Jaco. Last year, Triodos was the first bank to join the global campaign calling for the treaty to phase out fossil fuels. Why was this important for you to join this campaign?
Yeah, Katarina, thank you very much. Well, there's so many levels to answer this question, because it starts, of course, with a personal conviction that this is the right thing to do, and that we all should do our utmost to make it happen. But if we take it a step back, I think what we have now is lots of green agreements. We have lots of green regulation and green policies, which describe sometimes in a lot of detail what you should do when you want to do something positive with green investments. And what is lacking is that we have the same in terms of what you are not allowed to do on brown investment. And so we need a plan to phase out fossil fuel. This, as far as I'm concerned, is the missing link in terms of what we're looking at the total scene. Here at Triodos, we try to be a front runner. So in the Netherlands, we financed the first windmill back in the 80s, and we are still, according to Clean Energy Pipeline, the largest financial institution that finances renewable energy and clean technology. So for us, it is a really logical link because we believe in this transition, and it aligns with how we make our business. But banks cannot do it alone. It is always a interaction with society at large and with governments. So in this case, we need an intergovernmental agreement that basically not says we stop fossil fuel tomorrow, because that's not the argument, but that is very clear how we are going to phase it out, and then we will push to do it as quickly as possible.
Thank you, Jaco. So, in report after report, banks are being called out not to adhere to the urgency here. What would it take, and what is it? Why is it that not other banks follow suit, follow your example that you're leading on here?
Yeah, it's a very good question, because I think one of the most prominent reports was BankTrack that basically said that since Paris and since we all committed to the 1.5 degrees, we've seen 6.9 trillion in financing from the 150 largest banks. So it's still ongoing, and a really big problem. I think maybe let's start on the positive side. I think banks like Triodos, but also banks like Amalgamated that we'll talk later, and many other banks are showing that it can be done. So I mentioned that we were the first to become active in renewable energy, but we now see that it is almost mainstream. So we've also moved on to different technologies in that space because we want to remain a front runner. So you do see that there is some following happening. So one of the things that has to be done is that it takes people to give the example so that others can follow. But if you look then at the banks, then they have a relatively short-term focus. The risks of climate, they look at not at the long term in terms of how it should be done. So we also need to create a framework together where everybody is going to look not just at short-term risk and return, but really longer term look at both impact, risk, and return. And when I talk about return, I talk about the total return that includes the positive impact that you have. For Triodos, big, at least the ambition is to be very big. A negative impact that we all have. You still need materials that are dug up sometimes in places that we really don't like. We have to change that. So minimize our negative impact and then still have a solid financial return. And my ambition is that banks like us, are the best in terms of that total return, positive impact plus minus the negative impact plus the financial return.
Thank you for emphasizing the looking at the bigger picture here. So, Ivan, I'd like to turn to you. What is your take on the role of banks in creating a sustainable future? I mean, it's a big question, but give us your top thoughts, please.
All right, thank you. It's great to be here. Jacco, it's good to see you again. I think I'll start from where Jacco was talking. We obviously, banks have invested incredible amounts of money into the fossil fuel industry and are very tied to the fossil fuel industry. And they are also now investing, huge amounts of money into clean energy. I mean, at Amalgamated Bank, it's about 40% of our lending and select investments is going into climate solutions. And I think anybody inside the banking industry is sort of looking for those opportunities. But if we don't look at what the problem is, i.e. fossil fuels, and address the massive amount of fossil fuels that are in production and are in the supply pipeline, we're not going to be able to solve the climate crisis. And we're well beyond 2 degrees as our trajectory right now. So the question for banks is, can they just walk away from that sector if the economies don't move in that direction? Or did they use their political muscle, their political capital, so to speak, to help move it in that direction? Because you can't really have an enormous imbalance between where the economy is and where finance is, right? They really are reflective of each other and serve each other. And one of the things that we see with respect to fossil fuels is, even in the COP process, it really doesn't get mentioned so much. I go to climate conferences and talk about climate all day long, and people don't talk about fossil fuels. And so what the treaty does is say, this is time for governments to step up and do their part. To first put a limit on how we expand fossil fuels. We can't keep digging the hole that we're in. Second is to have a fair phase out. Not everybody has to phase out at the same pace and time, and different economies have a different place in the timelines here. And then finally, to make sure that the transition is just and fair to people and to economies, particularly those that did not create the problem and suffer the most from it. So the treaty does that, and it really is an effort to say to governments and to policymakers, we need a plan to transition away from fossil fuels, just as the process, the COP process said last time. And we as banks, Triodos, Amalgamated, now 25 banks inside the Global Alliance for Banking on Values have all stepped up to say, we support that. We're going to lean in and use our insights into the banking sector, into the climate crisis, to call for a fossil fuel non-proliferation treaty, and that's why we're here today.
Well, thank you very much indeed, Ivan. Turning now to you, Ariel, you are challenging in your home territory in Canada, the expansion of fossil fuel extraction, and what is needed for your communities in terms of financial support to make this transition away from fossil fuels possible?
I think that a lot of the points that have been made by the previous speakers are very, very true. We have been investing so deeply in the fossil fuel infrastructure in places in my territories in northern Alberta, in the Treaty 8 territories of many Indigenous communities. And what we first need to do is be talking about how we can phase out of these systems that have caused irreparable harm, not just to communities, but to ecosystems, and have exacerbated the climate crisis. And it has to be done in an equitable, fair way. But we can't just phase out of those industries in that area and leave and create economic deserts as well as energy deserts that are happening already. And so we have to be talking about a just and equitable transition that looks at where the financial sector has a role to play. And this comes at how do we improve not just moving funds towards renewable energy sectors, but how do we improve the risk analysis to ensure that this just transition that's being financed by both the public and the private sector includes analysis for human rights and the rights of Indigenous communities to ensure that we're getting a fair share of the finance and resources to build that transition, that it is moving towards energy systems and models that aren't going to further exacerbate the historical harms and wrongdoings that have been done by this industry for the last few hundred years. And from there, I think we'll start to see how the roles of banks is setting the stage. They can start adopting principles and processes right now that look at a equitable just transition that includes both human rights and the rights of Indigenous peoples in how we not just finance this just transition, but how we ensure we're doing it in an equitable and fair way. And I'm really excited because our communities are really just chomping at the bit to find real access to resources to build that renewable energy future that is aligned with our values and protects our ecosystems and our cultures.
Well, thank you very much, Ariel, indeed. So turning to you, Anderson, tell us about WRI and your work to shift the financial flows from dangerous activities to activities that actually sustain life instead of destroy life. Please share your some thoughts about your work, and also if you'd like to reflect on what Ariel just said about the Indigenous communities.
Sure. Yes. Yes. Thanks for having me. And I can give a little bit of a background of WRI. It is a think tank, but also has a pretty sizable operations on doing implementation regarding exactly what Ivan, Jaco, and all the panelists have been saying. The just transition towards protecting people, climate, and nature. So we are looking at how the transition can really incorporate all the aspects of protecting climate, protecting nature, but also people, so that the just aspect is not forgotten. And I specifically work researching the finance, sustainable finance from the private sector, so banks, asset managers, asset owners. And regarding this topic, we've been doing research on tracking the net zero commitments by banks. We've done recent research published regarding looking at from a framework and 17 indicators how banks are faring regarding their net zero commitments. So specifically on their fossil fuel policies, what we see is there has been some progress over the years. So more banks, I think, seeing examples from leading banks such as Amalgamated, Triodos, and others, La Banque Postale, they have incorporated some of their policies to exclude some of fossil fuel financing in their exclusionary policies. So you can see that they now are, some of banks are excluding financing in the Amazon forest or on the Arctic or on ultra deep water offshore oil and gas exploration. So some progress has been coming over the years. I think thankfully in large part from pressure from civil society, but at the same time you see that progress is not fast enough. Especially this speaks to some of the points that the panelists have mentioned. A lot of these policies from the banks are tied to their national economies. So for example, Canadian banks, they have exclusionary policies for for Amazon or deep water exploration, but not exactly on tar sands, because that's where the oil and gas industry is heavily influencing or strong in the Canadian economy. Similarly, in the US, you don't see a lot of exclusionary policies on fracking. They might have some on the Amazon. So you can see a little bit of a pick and choose from the banks in terms of their financing exclusionary for oil and gas. So I think as it was alluded to, the banking sector is closely tied to how the economies of the national economies of these countries are set, the political economy. So as countries develop their policies and change their energy mix, the financing of the banks would also be transitioning towards phasing out fossil fuels and moving more towards renewable energy resources.
Thank you, Anderson. So Jaco and Ariel, and also, of course, Ivan, this dissonance that Anderson is pointing out here between policies when it comes to investing, for instance, in the Amazon and also in your own, not cleaning up in your own backyard. What are your thoughts about this? Jaco.
Yeah, so let me go first. Yeah, I'm inclined to also react to all of the things that were said before, because I think they were very valuable points. So let me just say that I think we need to do many things, and I'll get to the policies very soon. One is, I think the citizen sort of look on this is very important. In a country like the Netherlands, although we are also polarizing, 70 to 80% of the population still wants to take more action on climate. And so there is that popular sort of belief that that really has to happen. We have recently initiated a citizen initiative, which in the coming weeks we actually managed to get the number of signatures that you have, where we're going to the parliament to actually advocate for the changes that I'm going to talk about. And then those changes that have to happen is, of course, what Ivan and I talked about, the long-term plan to phase out fossil fuels. But if we look at the elements in there, and you mentioned some as well, Katrina, yeah, we currently have more fossil fuel subsidies than we have green subsidies. So there is a lack of incentives. And so in terms of what we tax and what we incentivize, we don't get the system right today. And that, I think, is what has to change.
Thank you very much. Please add on.
Yeah, I would just add, instead of reflecting on Anderson's point, banks are very reflective of their home countries, right? And so Jaco and Triodos reflect, I think, incredible leadership on climate change, because that's something that's widely held within the Netherlands. The Dutch people are focused on this issue, and they have a long track record of leadership. And then, but you look around these countries, you say Canada, heavily invested in oil and tar sands, oil and gas coming from there, or the US with its coal, oil, gas, the largest exporter of gas and oil in the world. We have a problem with many of these producing countries being really very much tied at the government level to a fossil fuel industry. And the banks reflect that. And so however they operate, the big ones globally, they still reflect a lot of those politics and those policies. And until we have a way to break apart the kind of addiction to fossil fuels and the interdependencies between some of these producing governments and the industry, it's going to be hard to really get the banking industry to kind of follow suit. I think if we do that, if we do something like the Fossil Fuel Non-Proliferation Treaty, and we can enact that at a country level, then you will start to see banks head in that direction as well. They have great incentive to, because in many ways they carry the financial risk that's associated with failure on climate. But it's going to be very hard to break that alliance without some sort of global structure and global agreement to actually limit, phase out, and manage that just transition for fossil fuels.
Thank you. I have one final question, and it goes out to all four of you, and you have about 2 minutes each to answer it. So it's about, we have the treaty, which is, of course, is a fantastic tool that I have much faith in. But what other policy regulations or other structures in terms of frameworks in the financial sector would you like to see to move this further on? I'd like to start with you, Ariel.
Well, I think some of the negotiations here in Azerbaijan are really focusing on climate finance. And while the bulk of the conversation is looking at public finance for climate finance, there is a strong move towards the need to pull the private sector in because of just how much power they have in influencing a true just transition. And so we don't just need to be talking about having agreements on how the public funds need to be driven for this just transition, but where is the public sector's responsibility, and how are we ensuring that there aren't exclusionary policies that create what many of people in my community call sacrifice zones. And so we need to ensure that the policies that we create both here in Azerbaijan and in the public sector ensure that there's a reflection of both a human rights-based approach and indigenous rights-based approach. And we have to see this being developed through things like going beyond the precautionary principles, going beyond the equator principles, going beyond the sustainability principles, and really seeing a drive for how we can equalize both the human rights, the needs of our economies, and the ecosystems protection that we are all striving for here. So this is going to take a lot of work. That is going to be an outcome of some of the negotiations here in Paris, but the responsibility is going to be on the public sector or the private sector to adopt these policies internally to really drive us home to a true just transition.
Thank you very much, Ariel. Anderson, please continue. Your thoughts on policies and frameworks.
Sure. Yeah, one framework that I think would be helpful for both in terms of policies for banks, but also for bank clients, is to think of both of the fossil fuel supply, but also the fossil fuel demand. So that's where we can really make a dent in fossil fuel financing, and then eventually on fossil fuel demand and supply. So on the supply, I'll just note that although a lot of these bank financing is very contingent on domestic policies, national economies, the divestment or foreclosing bank lending to companies, there is evidence. There's a Harvard Business School study that shows that when banks stop lending for some coal companies, that increased their funding costs and then eventually led to some early retirement of coal plants. So I think there's definitely movement and work that needs to be done regarding continuing the pressure for banks to include more of stopping financing of activities that are not aligned to net zero, but also on looking at the fossil fuel demand. So banks should also take into consideration their financing towards, for example, auto manufacturers that are still producing internal combustion engines that really drive a lot of the fossil fuel demand that in turn drives the fossil fuel supply from the oil and gas companies. So banks that are engaging with their clients to have transition plans to move their business models away from fossil fuel the economy towards the new net zero economy. I think when clients are looking for banks, I think that should be also one area to look into.
Thank you, Anderson. And Jaco, and let's go with you, Jaco. We have 4 minutes and 40 seconds. So you split it up between the two of you.
Well, I think first I want to underline a point that was just made before, is that indeed we have to engage the private sector, because that is where ultimately all the money is. Governments can go only so far if they try to do things directly. So they are much more effective if they can create ways to actually attract private sector funding. And I think if you look at these type of agreements, I think the fossil fuel sector is now fighting against it, and even banks are sometimes fighting against it a bit. But I think those banks now have assets on their books that show relatively large volatility, and going forward that will only become bigger. So I think if we don't say let's stop tomorrow, but if we actually create a feasible plan, then it creates also some level of stability going forward, and even a level playing field if we do it with maybe not all countries in the world, but a sizable number of them.
Thank you very much. Ivan.
I think the missing player here in many ways is the central banking system and the supervisors that are focused on stewardship of the economy and avoiding systemic risks. We are hurtling towards catastrophe a climate disruption that any economy will not be able to survive. And a lot of the regulators that supervise banks, that supervise the economy, are really behind the curve in thinking about what they can do to avoid that risk. And so there's work being done within the network for greening the financial system, which is a coalition of central banks, and certainly the European Central Bank and others have sort of led in this space to say, okay, we need to regulate and supervise the economy in a way that actually says, okay, the cost of capital for dirty industries is going to go up, and the cost of capital for the solutions we need is going to go down. There are places in the world that have set targets for financial firms on how much they have to dedicate to green lending. And so I think there's a lot that could be done if our banking system was really focused on risk at a regulatory level. They would be doing a lot more on climate change. And so that is one of the things that we're focused on. Unfortunately, we have a very tough road to hoe here in the United States, given the change in our government. But a lot, the best economies, the best democracies have an independent central bank, and so they have, I think, the opportunity and the space to be able to keep leading on this issue.
Well, thank you very much indeed, Ivan, and thank you, Jaco and Anderson and Ariel, for sharing your profound insights on this topic here. This is key, and if you're watching this and you might wonder, what is my money doing at the bank? Please check out the Move the Money campaign, and to make sure that your investments are not supporting the fossil fuel havoc that the fossil fuels are creating, but instead supporting the transition here. So check out the Move the Money campaign. It's on our app, on our platform, the We Don't Have Time, and it's a collaboration between We Don't Have Time, the Non-Fossil Fuel Proliferation Treaty, and also the United Nations Development Program and the Exponential Roadmap Initiative. So we have a lot of signatories. You can go in and sign yourself and check it out, and how you maneuver and move your money in the right direction. So we'll keep at it, and thanks again for our prominent guests here sharing your insights. Thank you, and bye-bye. Let's move on.